What's up, guys? Welcome to another This Week in Crypto with Santiment. Really excited to have you all. Today is June 25th. We are going to get into a lot of information about the markets today. It's going to be primarily Bitcoin focused, and we will definitely discuss some other projects toward the end, as always. So make sure to drop some questions about the projects you'd like us to take a look at and what our data is currently indicating about them. We are looking at the past week of price returns, as we always do to kick off the call. Before I get into the data, I just want to ensure everybody knows we are not here to give investment advice. We are here to report on what our data is indicating, nothing more, nothing less, and to remain as objective here as possible. So with that being said, looking at the price differences here, we can clearly see it's been a sea of red, outside of a small handful of coins that had some gains over the past week, notably Quant. All projects here have fallen significantly. Bitcoin, being known as a relative, I say that in quotes, of course, safe haven, has proven itself to be true this past week, it dropping 12%, while the vast majority of these top 100 altcoins have fallen over 20%, some well over 30, a few even negative 40%, as we saw with Kusama. But yes, overall, we're seeing, Bitcoin going all the way down to 29 or so. It might have even been 28.5, something along those lines, before making a big bounce up to 3,500 about a day ago, and now back down to 32 to 33K as it is right now, about 33, just under. Ethereum has fallen all the way down to 1850 as of this time. So we'll be going over the health of Bitcoin, whether we're going to see a turnaround, and what you can brace for heading into July over the next week here. So all of this being said, I just wanted to illustrate really quick the price differences that have gone on over the past few days. This is about the past 48 hours or so. And we can see Bitcoin here in green. I'll actually make it an area chart so it stands out a little bit more. This is Bitcoin. Keep in mind that these are all on their own axes. So if we did this in percent form, Bitcoin would actually be looking a little bit better here. But this is just Bitcoin's low versus Bitcoin's high, Ethereum's low versus Ethereum's high, etc. You get the point. So even with that being the case, we can see very clearly Ethereum's been taking quite a hit. It's been actually the most volatile of these top 6 or so coins. Binance, Cardano, Doge, and XRP network, they're all kind of trading within a range with each other, staying relatively close to what Bitcoin's doing. But Ethereum has really jumped up and down a lot over the past week, and it's quite an interesting pattern because Ethereum tends to be one of the least volatile ones relative to the rest of the altcoin market. So we'll talk a little bit about that as well, and I want to start by showing what's going on with the perpetual contract funding rates. I'll get rid of Ethereum here and just show you Bitcoin quickly, and we can see that this pattern of negative contracts on BitMEX has continued for going on about a month now, a little over actually. And ever since this big drop back on May 19th, May 20th, we have seen a continued pattern of people shorting and being somewhat successful with it, if you want to call it that. It's mostly been ranging ever since this big short pattern started. But today, if we were to just zoom in, I'll zoom into just the last, well, I guess I'll go a little bit more. Let me go to the last 24 hours. Yeah, so today it's actually sort of neutralized. We can see here that it's at about negative 0.00008%. That's pretty much just a neutral signal. So people are kind of buying the dip now, or at least closing their shorts, because they feel as though with the patterns going sort of up and down between 29,000 all the way up to maybe 37,000 over the past couple of weeks, that us being in the low range would imply that we're going to bounce back up again. People tend to be habitual, and they will go with what has been the recent trend on crypto. and recently it's been kind of bouncing back and forth between those ranges. Thus, a lot of people think they're being ahead of the game by closing their shorts now. Um, just keep in mind that this sort of support level, resistance level type of thing, it's based on hindsight bias, and it's prone to always change. So we look at this funding rate as essentially just a reflection of people thinking that the pattern is going to continue. And when the crowd thinks a pattern is going to continue, that tends to be when the pattern breaks. And Dino, if you want to comment on this as well, I'd love to hear your
Yeah.
thoughts about the funding rate.
Yeah, so I was actually, it's a very interesting trend that we've been seeing over the last basically 48 hours as far as the funding rates are concerned. So yesterday, throughout the day mostly, we have seen a fairly decided bearish bias as far as Bitcoin related funding rates. So not just on BitMEX, we've also seen, like, even as the price of BitMEX of Bitcoin started to recover to around 35, almost 35K, we've seen funding rates, which is a fee paid by one side of the perpetual contract to the other, drop on BitMEX, Binance, Huobi, and OKX. Just all over the board across all high volume exchanges, we've seen a decline in the average, or just the general funding rates for Bitcoin, suggesting that more people were shorting, and that the derivatives market had a decidedly bearish bias. Now, over the last 24 hours, even though Bitcoin has failed to capture that same level, and we're now back to around 33K, the funding rates have not kept up. In fact, they have gone the exact opposite way. We are clearly seeing a divergence of sorts between the price of Bitcoin, which is declining on the one side, and the funding rates, which are actually moving back into the neutral position. So it's not just for BitMEX. As we're talking, I'm also checking out Binance, Huobi, and OKX. It's pretty much the same thing across the board. In fact, OKX has actually gone the exact opposite way into a positive territory. Its funding rates are at the time of talking. So for me, the question is why. What exactly is happening to derivatives market and derivatives traders in order to instill them, if not massive confidence in the coin, at the very least to make them feel like they don't want to short it. And it's, by the way, Brian, if you look at the Bitcoin social sentiment over the last 24 hours, you will also see, if you zoom into the last, just smooth it out a little bit more to the left.
Got it.
Yeah, you will also see a slight move into the positive sentiment for the first time in what I think is like 2.5 weeks. So it's definitely, for whatever reason, we have been seeing a lack of a bearish bias, and for some reason, general sort of uptick in confidence among the Bitcoin traders. Now, I think there's a few potential explanations. Number one is there have been a few more sort of positive bullish news coming out from El Salvador. I think, there was an announcement that Athena Bitcoin plans to invest like over $1 million to install about 1,500 cryptocurrency ATMs in El Salvador. I think some options have already expired today, and they have not they have not sort of had a disproportionate impact on the price of Bitcoin. I think a lot of people were keeping their eyes peeled on Bitcoin options expiry, and will be throughout the day. So it's one of these things that that might have sort of impacted the overall sentiment of the market. So those types
El
of things.
Salvador's president also announced that every citizen is receiving $30 in Bitcoin, which I found very interesting. That was announced yesterday.
Oh, there you go. So there are, I guess, some positive news, even though Bitcoin has not really been, has not really done much to justify it in terms of its price action. But to me, this isn't necessarily a great thing. So we're missing this type of bearish bias and general lack of confidence among traders, which, as if you watch our videos, you know that in general, while none of this is financial advice, in general, we like to look for periods of increasing market pain and fear and uncertainty about the future price potential of not just Bitcoin, but the entire cryptocurrency market. So what we're seeing right now is while not the exact opposite of it, it's at least sort of a neutral sentiment, both by the cryptocurrency crowd. So based on the information from more than 1,000 different social media channels that you're seeing on the charts right now, the crowd isn't like super bearish about BTC at the moment. And then on the other hand, the funding rates are neutral to positive as well. So across the board, there is an interesting lack of bearish bias to end the week. Previously, historically speaking, based on several backtests, extremely bullish sentiment is rarely a friend to cryptocurrencies. In fact, extremely bullish sentiment has often coincided with local price stops and incoming corrections. We've done some backtest on over 3,500 different events where once a coin's social sentiment reaches its peak, it tends to fall off by, I think, around -6% over the next 20 days. So there is some sort of data-backed analysis to suggest that extremely bullish sentiment is usually an indicator of overvalued conditions and irrational confidence into the market. Obviously, this isn't extreme in any way. You can already see that it's just sort of a tiny uptick in bullish sentiment. But on the other hand, as far as Bitcoin is concerned in particular, over the last 2 years, we have seen a lot of Bitcoin's price recoveries originate from a predominantly bearish sentiment, not just in terms of social volume and social sentiment, but also in terms of funding rates, right? When people are extremely scared and starting to short BTC, that's sort of the area where, first of all, a lot of people have an incentive to liquidate those shorts, and then otherwise, generally, if there's enough buy the dip pressure to sort of counteract that fear, that increasing fear, it can form local price bottoms. So for now, we're not seeing the bearishness that we would necessarily like to see as far as off-chain indicators are concerned, Brian.
Yep. Yeah, and I think this graph here kind of reflects exactly what we see on the funding rate as well, where we're continuing to see kind of this mostly bearish sentiment, at least for the last month or so. Followed by just recently that big uptick. And it could be nothing other than people seeing the bounce happen just slightly, going down to 29 or so, and then quickly bouncing up to 35 over the next few hours. That tends to excite people again. And in hindsight, people tend to get very excited thinking, okay, that was the dip to buy. Now it's time to get back in. So that tends to be how these things work.
Yeah, so we got a request from Ethan here saying that since Max was so confident and on point as far as the fact that we're going to see a big drop in Bitcoin's price, he's wondering about what Max's current opinion about the market is. I mean, I don't want to, like we've been talking about it the last couple of days, I don't want to speak for him. So I'll try it, Ethan. I'll try to get Max on the call during the next 15 to 20 minutes to see if he maybe wants to share some of his wisdom. But yeah, in the meantime, go ahead, Brian.
Yeah, and I do want to say, don't expect him to give market calls on a frequent basis. As we state at the beginning of every one of these calls, our job isn't to give investment advice, it's to show what the data is indicating. And I believe that Max did so in his last one. So if he does have something prepared, we'd love to hear from him. But please, feel free to request these kinds of things, but don't be upset if we opt to not provide a full prediction that will put us out there to be incorrect, because people react much more severely if we're wrong than they reward us if we're right. And that just tends to be how it works. Yeah. Okay, really quickly, on the exchange flow side, I'm just going to show you the last week. We have mostly been seeing money moving out of exchanges, a little more so. So anytime the pink line here is in the negatives, that means that it's more outflow than inflow, and especially since June 23rd, it's been a lot of big move outs of Bitcoin, which is a good thing. It means that people are locking away their funds again. We're not seeing big upticks in inflow, which is a sign that there could be an upcoming sell-off. If we go back to the last month, we saw a lot more big upticks back here, back when the price was high. Let me isolate this area here really quick.
Yeah, you can also just show the supply on exchanges for Bitcoin. I was checking it earlier today. It's basically showing the same thing. Pretty steep drop off in the amount of BTC available on exchanges. By the way, guys, this is updated data. We have recently sort of completely reimagined our Bitcoin metrics and have worked on our labeling quite a bit more. So
what's it under now?
Sorry?
Oh, here it is. I couldn't find it myself. I thought you were talking about the labeling. Sorry.
Yeah, no worries. So yeah, you'll see here that since the May 23rd bottom, maybe if you zoom out to like the last 3 or 6 months. Yeah, there we go. So we've obviously seen an uptick in the amount of BTC being moved to exchanges during the correction, which makes perfect sense. A lot of people selling, a lot of people capitulating out of the market. We have seen some signs that people were actually selling at a loss. All of that was sort of visible in Bitcoin's on-chain data. Since then, there has been a move towards basically just people offloading away from exchanges. Now, there have been a little bit of a few smaller spikes in exchange inflow. I've actually talked about it in a video 2 days ago. So if you go back on our YouTube channel from 2 days ago, I talk about what exactly I think happened during the sort of early week of Bitcoin's price action, how we were able to recover from 29K to 34.1K. But across the board, the trend has been away from exchanges. So there seems to be sort of an exhausting sell side pressure, which hopefully is a good sign for the market. There obviously needs to be a period of uptick in exchange inflow and general sort of market awareness in order for just, I think it's healthy. I think every now and again, market requires a blood sacrifice in order to keep going and keep running efficiently. But at some point you need to, there can be a sort of an ever increasing sell wall. So the fact that we are seeing a relative drop off in the amount of BTC moving to exchanges, and actually, in fact, we are seeing the exact opposite, hopefully is a good sign for the health of the market. Now, if you look at Ethereum's exchange inflow over the last few days, you can see that Ethereum's on-chain data is not looking as cool, as breezy. So first of all, the percent of Ethereum on exchanges has spiked once again. And so if you look at the last time it spiked, it's pretty much been during the capitulation as well. So it suggests that a lot of people are quite concerned about Ethereum's short-term price action. I think that makes sense because Bitcoin has recovered fairly more quickly than a lot of top caps, including Ethereum. Bitcoin's market dominance has I think now it's at around 47%. It's recovered quite nicely since the start of the month. However, Ethereum has fallen behind. So when you look at Ethereum supply on exchanges, it's rising once again, suggesting another sort of approaching sell wall. And then if you look at only the exchange inflow of Ethereum, you will see some very notable spikes. The biggest one happening right at the local bottom here a few days ago. Yeah, there you go. So a big spike in exchange inflow right around the bottom, suggesting that at this point in time, there was a whole bunch of people looking to sell ETH, get out of the market as Ethereum fell to, like, I think it was 1750, the lowest that I've seen it around that point. So, and then we've had another sort of relatively lower dip or spike in exchange inflow yesterday as well. So across the board, people are continuing to feel fearful and continuing to apply new sell-side pressure to ETH. And that's why I think some of the people that I have talked about and general sort of sentiment that I see on my timeline suggests that even if Bitcoin is able to recover, it might leave some coins and especially Ethereum sort of behind. Remains to be seen, but this certainly shows a lack of confidence in Ethereum's future performance, right?
Mm-hmm. And it's also worth noting that if Ethereum is struggling and continues to, that's going to have an impact on a lot of ERC20s. Just as we saw during the bull run, when Ethereum was doing well against Bitcoin, that is when a lot of altcoins, which many of the top ones are ERC20 coins, tended to thrive as well, and even more so than Ethereum. But vice versa, if Ethereum struggles, you're going to see some struggles from many ERC20s. There's still going to be some individual ones that do well, like Quant right now, but a lot of the ERC20s are going to follow the path of Ethereum right now, and we need to see the market health probably look a little better than it does right now on the Ethereum side. So remains to be seen, but snapshotting things now, as Dino said, both the supply percent rising and the exchange inflow spike going on, it's a little bit concerning. So, all right, we'll move on to mean dollar invested age. Just to get.
By the way, the people's champ is here. We've got Maxim himself. So, brother Max.
Oh wow!
Oh, wow, yeah, I'm
People's
hyping you
champ.
up. I'm
Welcome.
hyping you up already.
Sorry, I missed. What was the question for? Yeah.
The
So,
question
okay,
is where the prices are going.
yeah, the question is, Max,
Oh.
share your wisdom with the crowd, because so far you have been on point, especially with this drop that we've seen at the end of May, right? So we've had Klaus and Ethan and I think a few other people in chat say, okay, bring out the big guns. Enough of this data talk. Give us the sage. Give us the wise old man that is saying where the market is gonna go. Obviously, metaphorically, old Max. I'm not, So anyway, do you want to share your screen, or maybe just kind of talk about where you think that the market's been going? I know we've discussed it over the last few days, but maybe share it with the congregation here.
Oh, this is now very challenging.
Yes, I know.
Well, me personally, it's not 80-20 situation at the moment. Okay.
Okay.
Not like now. I read what was discussed in the Google chat, not Google chat. Yeah, in the chat room. There was indeed 80-20 situation back in May. Now it's not like clear as this. Still, I expect at the moment recovery.
Mm-hmm.
Yeah, it's yeah, for me personally, the more likely scenario, and based on assumptions that the market is here to confuse and erect participants. So first, it will be ideally we go to 37, a little bit down, then break 40,000. Everyone can confident, and then we retest the low. In the current condition, there is a still chance we can retest the low, but I'm for going up at the moment. It seems to be the past of at least expected. If we go to 45, it's not what people expect, and this is what the market typically does. So I don't know if it does. And based on the data, we're discussing yes every day, and that looks quite okay, consistent for some time already. People feel comfortable shorting the market. It's good. It's good to go up.
Yeah.
Is there any data in particular you'd like me to show, Max?
I think a lot of it has been we've been looking at Elliott waves and structures. So
yes,
yeah. So we were checking out possible Elliott wave infrastructures and architectures over the last couple of days, and it seems like we might be, according to Max, sort of building this wave 5 now. It's one possible scenario, obviously.
Yes. And no worries. At the moment, I feel confident. Like 80-20, I will definitely show it here. So just we are not there yet for 80-20 scenario.
Right.
So it's okay. We just talk data and we discuss and we make our bets. Well, I make my own bets on SanR too. Mm-hmm. I don't tell yet what are my accounts there, but it's fun. And it's not 80-20. It is more likely how I feel we go up and then we go down, but take it with a grain of salt.
Okay. Mm-hmm. Thank you, Max. Thank you for indulging the crowd.
Thank you.
Yeah. All right. Anyway, sorry, Brian. You wanted to show mean dollar invested age, right?
Yeah, no worries. We'll make it quick because it's mostly a continuation from last week. A continued rise in the average age in dollars invested in both Bitcoin and lesser so Ethereum. Mm-hmm. But Bitcoin in particular, we can see on the brown line here, we're at our highest average age since mid-February, way back on the 19th or so. Yep. And that is this is a pretty impressive turnaround here, and impressive for the bears, I should say, because we had a steep drop off even before December. We can go back a full year. And the drop off in invested age, this is when a lot of the new money came in and when a lot of the dormant tokens began to move all the way back in mid-October. And this was the sign that we would start to have liftoff. So if you saw this drop off back in the third week of October to coincide with this price rise, you would say, okay, this might be the beginning of something. And sure enough, we just absolutely launched, going from about 11,000 in October to, as you know, a high of 64,000 in April. And then right around a week after, I should say 2 weeks after, we were starting to flatline, and then we had a big rise showing that the new money is drying up, and anyone who was into Bitcoin back here is now worried because of the big drop off, and they no longer think that Bitcoin is this, free money, Lambo driven investment that it was when everyone was hyped about, Dogecoin and every possible project out there. So when this line is moving up, it's a bit of a concern, to say the least, on a macro end. So keep that in mind and follow this chart carefully if you've got your Sandbase Pro membership, to see if it starts to flatten out again and then go down. That would be a great sign that we're going to start to climb back toward all-time highs.
Yeah. So yeah, maybe just zoom out to for Bitcoin's mean dollar invested age, zoom out to the last like 7 years or so. I mean, I use this as a thumbnail to this video. Obviously, I'm hedging every time I write my weekly reports a little bit, because there are some positive news and there are some indicators that suggest that in the short term we might be able to recover. However, from a macro perspective, this is probably one of the longest terms indicators that we have as far as Bitcoin's on-chain data is concerned. And so far, historical performance is not indicative of future results. All that jazz applies. But so far, throughout the last 3 or 4 bull cycles, we have seen the same pattern. So the Bitcoin's mean dollar invested age continues to drop. It starts dropping somewhere in the middle of the rally, usually, suggesting that we are starting to see people redistributing Bitcoin to other addresses. Essentially, we're seeing reallocation of BTC en masse from one sort of stakeholder to another. I think during this latest rally, it was a lot of reallocation to institutional investors and holders. And then at a certain point, Bitcoin's mean dollar invested age starts to bottom out and move on the upside. Once it has moved on the upside, it usually indicates that on average, the market and network activity has moved towards dormancy. And as a result, there might be a lack of fundamental engagement and new blood moving into the market in order to, justify sustainable price recovery. So I am hoping that this particular chart starts going down once again very shortly, because if historical trends are to anything to go by, it's not a great look. Obviously, this is a massive macro indicator. So like Max said, we might very well be able to recover to 40K if other fundamentals align. But from a very long term, like 2 to 5 years perspective, it's looking concerning. So it's something that we're going to keep harping on for the time being.
Very good. Moving on to whales. So this is, as you know, one of our favorite charts to reveal quickly what the top stakeholders in Bitcoin are doing at any given moment. And we've discussed the last couple of weeks about this rising trend ever since mid-May, where those addresses between 100 Bitcoin and 10,000 Bitcoin are beginning to rise in terms of their total cumulative amount held in their accounts. And ever since about June 14th, we started to see a decline, and then it began to rise again. So currently we're sitting at about 9.09 million Bitcoin held by these top tier addresses, the Bitcoin millionaires, if you will. And this is the same range we were at about May 9th or so, when Bitcoin was still in the mid 50Ks. So that's a good sign in that respect. What are you seeing here yourself, Dino?
So between May 23rd, which was basically the first sort of price bottom for Bitcoin, and up until today, we have seen basically around 70,000 Bitcoin being added to the total balance of addresses holding between 100 and 10,000 Bitcoin, essentially Bitcoin's millionaire addresses, right? So what I think is good about this chart is that it points to a certain sort of mid-term recovery as far as whale confidence across the board. So actually, Brian, if you zoom out just a little bit more to like up until October or something, people can see that, yeah, there we go. So there we go. So here at the end of September, early October, this was the start of very strong rise in the combined balance of these addresses, suggesting that this was the point at which, I mean, very shortly afterwards, and by shortly I mean a couple of months, we've started hearing word about Grayscale, MicroStrategy, Elon, but I think a portion of that accumulation by large addresses has happened here at the start of October. So since October and up until April 14th, basically Bitcoin's all-time high, we have seen a very strong, decided rise in the amount of Bitcoin held by whale addresses. So I think that makes a very good case for this notion that has been, probably the most popular narrative, that the 2021 rally has been driven by institutional interest based on Onchain data that clears out 100% or checks out 100%. However, between April 14th, which is Bitcoin's all-time high, and May 23rd, the amount of Bitcoin held by these addresses has dropped by 130,000 BTC. It's a month and a half long decline after essentially a 6-month long accumulation period. So between those two price points on April 14th and May 23rd, the price of Bitcoin has fallen by 48.7%. I know these things because I wrote an article yesterday about it. So I'm not just keeping it in my head like some kind of a Rain Man. So anyway, the point being is that the first time that we've seen large Bitcoin addresses have more than a couple of days of a downtrend in terms of their collective balances, we have seen the biggest correction for Bitcoin since the start of the rally. So while, yes, over the last basically, I think 10 to 14 days, there has been just a sort of a consolidation period for large Bitcoin addresses, the trend continues to be upward. So I am remaining hopeful that this is going to be one of the things that pushes us above the 40K mark, but it's going to, I think, need more. We're going to need more from the big boys, right? Especially given the fact that across the board, Bitcoin's general on-chain activity is not looking all that hot. Like if you look at the amount of addresses interacting with Bitcoin, they're still very, very low. I mean, very, maybe I'm over exaggerating, but they're still at around 750 to 800,000 addresses a day. So this last point obviously is data still being aggregated, so take it with a grain of salt. But between like April, even between like, May 12th, we were at 1.3 million addresses, and then yesterday we were at about 750,000 addresses. So it's a 850 there we go. It's between 750 and 850, depending on the point in time that you're looking at. So it's a pretty substantial drop-off in the amount of unique addresses that are interacting with Bitcoin. A lot of people seem to be just abstaining from network interactions. This is not just for Bitcoin, this is across the board. Ethereum actually has seen a bit of an uptick in daily addresses over the last couple of days, but there's a big but there, metaphorically speaking. So the reason why I think there has been, Brian's already reading my mind. The reason why I think there's a big spike in daily active addresses over the last couple of days isn't because there's people flocking back to Ethereum. It's in fact because people are selling Ethereum more than usual. So for example, you can see daily deposits in pink here, which is the number of addresses that are being used to funnel Ethereum to exchanges, which have started to pick up very aggressively over the last couple of days. So this points to the fact that while the overall amount of activity on the Ethereum network is growing a little bit, it seems to be mostly pushed by addresses looking to get out of Ethereum rather than new money and new blood coming in. So overall, on-chain activity for Bitcoin and Ethereum and all ERC20 coins has dropped fairly significantly. Like, for example, we were just writing a report yesterday, and I asked our data scientists to calculate the average daily active addresses for all ERC20 coins with more than 100 million market cap over the last 6 months. So what we've seen, I'm not going to share the chart just for time's sake, but the average daily activity, network activity of ERC20 coins has peaked in the middle of May with almost 10,000 daily active addresses on average. Now it's at around 5,000 addresses on average daily. So almost a 50% drop off in basically a month and a half. There has been a wide range of holders or general sort of network participants completely abandoning the networks for the time being and getting the heck out of Dodge. So I think that's a fairly concerning signal. Now, sometimes on-chain activity can lag, and if the price starts to recover, we might see another sort of inflow of users flocking back to the networks. But for the time being, it's a concern. It's suggesting that fundamentally there's not a whole lot of new money being pumped into the market. There's not a lot of general activity happening on the market compared to what we've seen just 2 months ago. Now, so the only thing that I will say that kind of keeps me hopeful is the fact that even though network-wide, on a network level, on-chain activity is declining, whales are still in an uptrend. So there seems to be a divergence between the sentiment of the general Bitcoin and Ethereum networks on the one hand, and the activity of Bitcoin whales, which are still sort of increasing their positions on the other. So that kind of remains or keeps me a little bit hopeful about Bitcoin's sort of short-term potential there, Brian.
Yeah, and I wanted to segue really quick onto the chart we were just looking at over to this model here, which measures the percentage of active deposits, basically the non-deposit variety ratio versus the active deposit ratio. And this shows the percentage that we're seeing in the last 1 day and the last 7-day average versus the 90-day average. And it's less complicated than you think. Basically all it's doing is telling us what the ratio is of that the non-deposit ratio versus the deposit ratio now versus what its resting state has been since, in this case, late March. And Ethereum, just as we illustrated, is seeing a downturn right now because of the fact that we had that big spike in daily active deposits. So it's red right now. And this red dot is indicating that its active addresses are under average, even with that spike compared to the last 3 months. But many other projects here, these are pretty much all ERC20s because they're the ones that we have the data to measure active addresses and active deposits. A lot of them are in the positives. We see something like Decentraland right now, way up, and its address activity is up. That's a very good combination. We see another one like Quant, which is up here at 60% above its normal active deposit ratio. Plus, over the last week, its non-deposit active addresses, or I should say, yeah, I have it right, 7-day non-deposit active addresses, way above its resting average. So there are some encouraging signs here to keep in mind. And if you don't have Sandbase Pro, this is a pretty good reason to get it. This model really gives a nice snapshot of what the current standing is for how many of the active addresses going on at any given time are of the deposit variety, aka the worrisome yellow or red flags out there. So keep that in mind. Just wanted to give a quick shout out because I think this model is really telling an interesting story right now.
For sure. Just one thing before we continue. So Max has already shared it. The other Max has already shared it in chat. Guys, we're going to be taking audience questions or token questions in about 5 minutes. So we've been talking about Bitcoin a lot today, I think, just because everything else seems to be, pulled by BTC's gravitational force over the last week or so. So where Bitcoin goes, I think a lot of lower liquidity coins are going to be following anyway. So it's a good sort of thing to keep an eye on BTC first and foremost. But if you have specific coins that you want us to do some impromptu on-chain analysis, social analysis on over the next 20 minutes, let us know in chat, and then Max is going to collect that all into a poll that you can vote on. I say this every time. The best possible thing that you can do for yourself is to ask for Ethereum-based coins, just simply because at the moment, our on-chain coverage includes Bitcoin, Ethereum, all Ethereum-based tokens, Ripple, Litecoin, Binance Coin, and I think that's about it. So if you want us to look into something like Polkadot and Solana, which we get requests for every now and again, we can, but we can mostly look at those metrics or sort of at those coins from a perspective of social data and development activity data. Now, those are still interesting, but if you want us to look into things like daily active addresses, exchange inflow, MVRV, a bunch of different indicators that are only available from the blockchain data, make sure that you ask us about Ethereum-based coins. So I don't know. I've seen a lot of people discussing Matic over the last couple of days. I've seen a lot of people discussing Quant. over the past couple of days because it's one of the only coins that is pumping despite everything else sort of going to heck. So I don't know, just whatever you guys are interested in, let us know in chat, and Max is going to collect a poll. But like I said, do yourself a favor if you want, and make sure that it's an Ethereum-based coin. All right, go ahead, Brian.
Yeah, thanks, Dino. So before we jump into some requested coins, a couple more things we can show off for how Bitcoin is looking, and we'll check out Ethereum really quick as well. On the Bitcoin side, continued pattern of red for the month of June in terms of its overall token circulation versus its market cap. What this NVT model effectively does is measure the ratio between the two, and the less token circulation going on compared to the market cap at any given time, the higher the bar is, and high is bad in this case. High means bearish and less circulation overall. When it's below the trend lines, that's when you'll see this green, indicating that a pattern of growth can occur. And when it's red, that's when you see a pattern of decline tend to occur. Obviously, it's not a perfect predictor by any means, but macro-wise, whatever the signal is in 1 month, the next month tends to follow about 80% of the time based on the backtesting we've done. So keep that in mind. We're probably almost definitely going to be finishing June with another red bar, the fourth of its kind. It began in March, right when we didn't hit our all-time high until April, but you can see average price-wise, March was actually the highest average price on a daily basis. And then we saw a decline, and a climb to coincide with these red bars. It's probably about to refresh here, which is fine. But before it does, let me just show Ethereum before it goes away. It is semi-bearish right now. And that's the first time we've seen that since January of 2020. So it's been a good 17 months since we last saw something of this variety. And it's a concern, to say the least. It means that the circulation for the #2 asset in cryptocurrency is drying up, and new addresses in particular are failing to form. That's why we saw the mean dollar invested age going up for it, just like we're seeing for Bitcoin a little bit, but it's not quite as red and bearish as Bitcoin is, which is a good thing, I guess. But when both Bitcoin and Ethereum are showing, red and orange, yellow types of signals on this chart, it's something to be concerned about.
Yep, for sure. I think it's also tying in perfectly with the mean dollar invested age, because basically it suggests the same thing. A lot of people not really interacting with the market, less value being transferred on the market on a daily basis, on the network on a daily basis compared to its market cap. Across the board, it's pointing to some a lack of fundamental on-chain support for a sustained rally. Obviously, this can change on a whim if Bitcoin breaks 40K, but for the time being, it remains pretty underwhelming. So anyway, Brian, you want to show us MVRV before we? So there's already a poll, guys, in chat. So Max has shared it. So while Brian is talking about MVRV, go and vote. Vote for the coins that you want us to analyze before we end the stream. Go ahead, Brian.
Yeah, thanks, Dino. So quick 2 minutes on this, and then I think we'll jump right into the questions. So as Dino said, make sure to vote. This is the MVRV Opportunity and Danger Zone Divergence model. And what this essentially does is see how the MVRVs have looked from 6 different time frames, that being 1 day, 7 day, 30 day, 90 day, 6 months, and 1 year. And it's combining all of those MVRVs into one formula and showing how above or below those usual 0% resting averages that each of those MVRVs sit on is. And currently, as you would expect, most MVRVs are well into the negative. You can see them here. These are their true MVRVs. So you can see we look at something like Quant, which is the big exception. Its 1 year MVRV is plus 161%. So the average trader of Quant in the last year is sitting at that percentage of gain. But look, nothing else is even close to it on this chart. Bitcoin here, negative 10.7 now. If we looked at this 2 months ago, all of these looked like Quant. But as we said, MVRV always ends up coming back to 0% given enough time. Even Quant will, and it won't always look like this. It doesn't mean Quant is going to drop, but it means there's going to be enough selling low and buying high from traders to equalize this MVRV back down to 0%. Just like all of these that are looking really negative, they're going to come up to 0% at some point. So over here on the divergence side, it's showing that because so many MVRVs are really down now, there's a lot of projects that can be bought on relatively low risk. That doesn't mean that the prices can't continue to go down, but it means that historically, buying now is much less risky than average, unless it's quant, because you can see quant is labeled as overbought. It's even below this danger zone marked here, while the opportunity zone, there's actually only two, I guess I'd call it three projects that are above that opportunity zone line, which is marked by any time the average MVRV of those 6 bars here are in the 90% or above range, basically the top 10% ever historically. So Raiden, Storage, Synthetics are among 3 projects that are in that top 90%, or I guess I should say top 10% of least risky times to buy from an MVRV perspective. So I just wanted to throw that out there. I find it interesting. We looked 2 months ago and these were almost all red, indicating there would be a correction, and that's exactly what happened.
Yeah, so obviously this is just one indicator, guys. And the MVRV, for those of you that are familiar with the metric, essentially shows what is the average profit or the average loss of a certain group of holders. So this is basically what you're seeing on this chart. You're seeing that a lot of holders are super below break even at this point, that are underwater, and as a result, according to some on-chain analysts, the lower the MVRV is, the more opportunity it can be to accumulate at relatively is the operational word here, a low risk. Now for quant, obviously because of the Coinbase Pro pump listing, that we are seeing massive pump. So it's the one outlier suggesting that the coin is a little bit overvalued at the moment. All right, I think we've got the poll results. Max, what will it be?
Drum roll, please.
We should have them on screen now. Decentraland, Mana in first place.
All right, cool. All right, cool. Let me share my screen.
Feel free.
Cool. So, just checking in funding rates. Oh, by the way, yeah. So before I get into it, these are the charts that I said that I asked our data scientists to create for us for an article that I was writing. So these are daily active addresses for ERC20 coins. This is the top. The average daily active address is almost at 10,000 here at May. This is where it is now. So, stuff like Uni, Chainlink, even Mana, all of those coins, this is their average daily on-chain network activity over the last month and a half. Anyway, let's leave that aside. And I am going to check out Decentraland. So I haven't really looked into Decentraland for the past couple of weeks, really. So I'm interested to see what's been going on. So one thing that is, by the way, guys, that you might have missed, it's a fairly new feature. I think it's only been live on the platform for about 3 weeks, is this notables tab right here. So what this does, for those unfamiliar, is that it shows you when there's an outlier in a particular metric. So for example, a few days ago, it is showing us that the wrapped ETH's age consumed has spiked ridiculously, which was actually right at the bottom for wrapped ETH and ETH itself. So at the moment for Decentraland, it's showing us that Decentraland's age consumed is starting to spike again. We are seeing relative uptick. Let me zoom in so you can see it. There we go, here, and then here as well. So this is obviously relative to the previous couple of days of general age consumed activity. What this basically points to is the fact that some mana coins that have been acquired at relatively a long time ago are starting to move on the blockchain, but it's honestly not that significant compared to historical trends. Anyway, let's look at the on-chain activity first in terms of just general DAA, or daily active addresses. All right, so this is Mana's or Decentraland's on-chain activity. At the moment, we are seeing a little bit of an uptick, just a tiny little bit of an uptick in the average daily address activity for Mana. So similar, basically, just like the chart that I showed you a minute ago, this is what we've seen for a lot of coins. Like if I check in Chainlink, if I check Uniswaps, you'll see the same drop of the same downslide in the average on-chain activity. At the moment, there's about there was about 800 to 900 daily active addresses interacting with Mana on a daily basis. At the moment, it's gone up a bit to about 1,500, which might be interesting. But overall, I think this is to be expected. As far as a coin with sub 1,000 daily active addresses, it's not the greatest, obviously. But given that everything has kind of gone to crap, like Chainlink's on-chain activity daily has gone from like 15,000 daily active addresses to 5,000 daily active addresses today. So everything's gotten cut in half or more. So I'm not surprised. Overall, I think it's, if this kind of proves itself to be worthwhile and maybe a beginning of an uptrend for the amount of new blood moving into Mana, it could, suggest fundamental support for another uptick. We can also see at the amount of, look at the amount of new addresses that are interacting with Mana. And on this hand, we are clearly seeing a decline. So after a period of general uptick in the amount of new addresses interacting with this coin, basically since April here, there has been a steady decline. At the moment, we are seeing about 320 new addresses being created on the Mana network, or that are first time interacting with the Mana tokens in their wallets. Still not as bad as I think you might expect. Like 300 sounds like a low number, but at the moment I would argue that probably still puts Mana in like the top 20 or 30 coins on the Ethereum blockchain, right? Now, as far as Mana's exchange-related activity is concerned, let's see what we got. Okay, let's zoom in a bit. So actually, Mana's exchange inflow remains fairly low. Let's look at the supply on exchanges just to confirm this. It's stable, yeah. So it's obviously risen here during the correction. So as you can see, let me zoom out a bit so you can see it a bit more clearly. There has been, and this is something that we see quite often, there has been a clear uptick in the amount of Mana being available on exchanges, coinciding with the coin's drop. So the reasoning here being most likely the fact that more and more people are looking to offload their coins to exchanges. Sell side pressure rises. As a result, there's more pressure on bulls to absorb this sell side pressure. If they're unable to, we're going to see a short-term price correction. Since then, Mana's on-chain exchange availability has kind of plateaued. So there's not a whole lot of new Mana being moved to exchanges at the time of recording. However, it's not declining either. So it's just kind of staying at these levels. That being said, it does seem like there's not a whole lot of new sell side pressure moving to Mana. Let's look at its daily deposits to confirm. There we go. Yeah, there's been a little bit of an uptick here at the bottom. So this suggests a little bit of panic sell-offs and holder capitulation. So daily active deposits are addresses that are being used to deposit Mana to exchanges. And this is why every now and again you will see these spike at both tops and local bottoms for particular coins. Like for example, we've seen it here at the price top for Mana here, but also at local bottoms here, and then on June 22nd. So the reason why I think it happens at bottoms in particular is it essentially suggests that a lot of people are panic selling this coin, overselling this coin, and in general, there's plenty of fear enveloping the market, right? So if there's enough buy the dip pressure on the other side of the aisle, it usually, these types of spikes during a correction get rejected and lead to a short-term price recovery. Like for example, if we look at network profit loss for Mana, yeah, this is what I was expecting to see. So network profit loss for Decentraland suggests a cluster here of dips over the last 7 days. So what network profit loss is as a metric, it's an on-chain indicator that tries to calculate the overall ROI of all daily transactions. So if you see spikes in network profit loss, it means that at this point in time, Mana coins that are moving on the network are on average being moved at a profit relative to the last time they moved on the market, or on the network, sorry. And then when you see these dips in network profit loss, it suggests that the coins moving on the blockchain, Mana coins moving on the blockchain, are being moved at a relative loss compared to the last time they moved on the blockchain. Now, this metric obviously assumes that all transactions are buys and sells, so it's not a perfect measure, but it's a pretty good gauge of the average investor sentiment. So as we can see, a lot of people were panic selling over the last couple of days. And when this happens, sometimes it does tend to kind of coincide with local bottoms. Like, for example, let's look at Bitcoin. Yeah, dip, net for profit loss dip, net for profit loss dip, net for profit loss dip, and then also a big net for profit loss dip on June 22nd, right as Bitcoin fell below 30K for the first time in a while. So sometimes when you see these types of dips during a correction, it can suggest oversold conditions. And if there's enough people looking to stock up on this coin at a discount, it can suggest, short-term sort of price bounce back. So let's move back to the Decentraland. All right, yes, I want to check out MVRV because we haven't really talked about it a whole lot today, and I think it can be quite interesting. So MVRV, for those unfamiliar, is an on-chain indicator that calculates the average profit or the average loss of a specific group of addresses. So for example, now we're looking at the MVRV ratio of the 30-day MVRV ratio, which is the MVRV ratio of all addresses that have acquired mana in the previous 30 days. So for example, right now, Mana's 30-day MVRV ratio is minus 25%. So that means that on average, the average loss of all addresses that have acquired Mana in the previous 30 days is minus 25%. So they're basically down a quarter on their initial investment, right? So how do you use this metric? Well, most on-chain analysts believe that the higher the MVRV ratio is, the more unrealized profits there are. And as a result, the more likely it is that people are going to start claiming these profits and dumping the price, right? And then on the other hand, the lower the MVRV ratio is, the more undervalued the coin is, compared to its market cap. And as a result, there is, if its fundamentals are sound, there's a higher likelihood for shorter term recovery. So let's look at historical trends for Mana's MVRV. Okay. And I mean, this looks fine to me, honestly. Obviously, this is okay. Let me first. Yeah, this is a daily interval. So here we can see that Mana kind of has an established support of in terms of its 30-day MVRV, right around the minus 40%, and it's actually bounced back right off of that point all the way up to now minus 21%. But we've seen at these points, like between, obviously this is not a perfect science, but between like minus 30% and minus 40%, usually that suggests like increasingly or sort of historically low MVRV ratio, the short-term or 30-day MVRV ratio. So as a result, it might be an opportune time to accumulate at relatively low risk. Obviously, it could go down further, like it could go down to all-time lows. You never know. But according to this metric, it suggested that, especially here, a couple of days ago, the price of Mana was pretty low compared to its MVRV, right? This is a short-term MVRV, so only the average profit or loss of short-term Mana holders. But if you look at the long-term 365-day ratio, it's not looking that different. Like the 365-day MVRV ratio, or the average loss of all addresses that have acquired Mana in the previous 365 days, or basically in the previous year, was also very low at about minus 40% as well. And Mana's this MVRV ratio does show a tendency to fall even further, all the way down to like minus 60% here and here. However, this is already quite low, and we've been able to bounce back a little bit. Now, we are still in negative territory, so technically undervalued territory for Mana's MVRV ratio according to both short-term and long-term MVRV, suggesting that, compared to historical trends, the coin is still relatively undervalued, right? So take for that what you wish. I just explained to you how it works. So there's nothing to suggest that we can't go back down to historical lows. However, based on historical trends, it's looking like there's enough support for a price recovery. Obviously, I think it's going to depend a lot on what Bitcoin does, but its MVRV is looking fine. Okay, let's look at social volume for Mana. I don't think it's actually going to be that interesting, but let's make sure either way. Okay, social volume. Yeah, not really all that interesting. We have seen several spikes around local tops here, here, and here. However, since then, there's not a whole lot of people talking about mana or the central end. Why would they? All eyes on Bitcoin, right? One thing that we can check is what is the average sentiment towards mana at the time of recording. Let's go here, enter the central end, choose a 12-hour interval. Just to kind of see whether, for whatever reason, there's like an increasingly bullish sentiment towards the central end. And in fact, it was here before a correction. All right, let's see. Yeah, so this is something that I think kind of illustrates my point as far as bullish sentiment rarely being a friend to cryptocurrencies. Like you can see this spike in bullish sentiment right here before we started crashing down. And we've also seen another spike in bullish sentiment here around 0.7 for the central end before another, well, this was a market-wide crackdown, but nonetheless. So at the moment, we are back to bearish sentiment, which I think is where we should belong if we hope that the market is going to recover, right? Most of the coins should kind of feel or most of the coins holders and market participants should feel uneasy about where we can go from here. All right, one last thing that I'm going to look for as far as mana is concerned is what is mana's on-chain activity compared to other ERC20 coins, because I think that's important. So like I said, mana's daily active addresses at the moment are around, actually, let's take rolling 24-hour addresses. There you go. They're a bit more up to date. So about 1,500. So let's look at all of the coins that have had more than 1,200 addresses in the last day. All of the coins that live on Ethereum, right? So the way that you can do this is you go to a screener. Sorry for the slow internet here. Anyway, what I'm going to do is I'm going to filter out only the coins that live on Ethereum. So first of all, reset all of my filters. Okay, so the first thing I'm going to do, as soon as this sort of corrects itself, there we go, almost 2,000 assets on our platform. First, I check only the coins that live on Ethereum, so Ethereum-based coins. This is going to drop the list down to about 1,200 assets. And now, we scroll down here to daily active addresses, and let's say, show me all of the coins that live on Ethereum that have more than, let's start with 1,000, that have more than 1,000 daily active addresses over the last day. And there's a total of 40 coins. No, there's not. There's a total of 22 coins, actually. So it's not a whole lot of coins. And here's mana, the central end, and at 0.17. So let's examine what are the coins that have in the last 24 hours had more addresses interacting with it on Ethereum than the central end. So that's basic attention token, Sushi, Quant for obvious reasons. So this is an outlier. AMP, Aave, Shiba Inu, DAI, RepBTC, Matic, Link, Uni, BUSD, Hex USDC, USDT, and Ether. So it's in good hands, right? Top 15, top 17 coins as far as on-chain activity. Yes, it has dropped down dramatically since like April, but it's still one of the most used coins on the Ethereum blockchain. So from a like contextual standpoint, its fundamentals aren't looking all that bad. What I would like to see, however, is this type of increase in address activity continue. Like it can't be just a one-day thing. It needs to sort of become a weekly or even a monthly uptrend to suggest that there is a sustainable rise in the amount of interest and on-chain activity for this coin in particular that would justify further price recovery. All right, that's as far as I'm gonna spend on the central end. Max, what was the second coin that people wanted us to look at?
We have a couple of coins tied now, but given we haven't spoken about it for a while and it's an ERC20 token, let's go with Go, OMG.
OMG. All right, cool. Okay, so let's do a few things here. Let's start with the, like I said, active addresses as well. Yeah, same thing. Like this is, you're going to see the same thing for pretty much every coin. So let's not dwell too much on it. This was obviously the peak of network euphoria. Since then, we have dropped down all the way down to about 430 addresses interacting with the coin. Fairly low, right? So basically just like a half auditorium, a very small auditorium is interacting with OMG on a daily basis. But 430 is still okay. Like it's probably in the like top 50 coins across the board. So yes, we would. It's not just about the total or absolute number of addresses. It's also about it's more actually about the trend. And the trend seems to be still a decline or a plateau. I do want to see these numbers rise up and this trend move into a positive one. Now, obviously, this is going to depend a lot on what Bitcoin does. If Bitcoin starts to rise, if it pushes alts alongside with it, I think we can see a sort of a market-wide recovery in terms of on-chain activity. At the moment, however, it's just not the case. But let's see if a lot of people are panicking as far as OMG is concerned. So, okay, we're seeing several spikes in exchange inflow here a little bit over the last, during the correction here. So there have been a little bit of sell-offs, panic sell-offs here at the bottom. So remember what I said a minute ago. Sometimes when you see these exchange inflow spikes and net profit loss dips around local bottoms, it can suggest that people are overselling and panicking, and as a result, it can mark short-term bottoms, right? So we've seen it, like if you look at Ethereum, it's the same thing. Boom, right? Also boom and boom here. A couple of other booms around local bottoms for Ethereum. So moving back to OMG, it's kind of the same idea. Some OMG holders were looking to sell as we dropped below 3.3 here because they were expecting further downtrends. As simple as that. Now, if we look at net profit loss, yeah, it's the same thing. We're seeing some pretty big dips in net profit loss, suggesting that not only were some OMG holders here selling their coins, but they were probably selling them at a loss. Like, look at this. There's a spike in exchange inflow, and there's a coinciding dip in net profit loss. So people are moving coins, OMG coins, to exchanges, and at the same time, a lot of OMG coins are moving at a loss relative to the last time they moved on the blockchain. So people, if you take those two combined, some people were selling at a loss. There's panic sell-offs and weekend capitulation. If there's enough buy-the-day pressure, these sometimes can turn into a short-term price recovery, or at least like a local bottom for the coin. And this is kind of what happened, right? So let's look at its MVRV ratio. Where are we? Okay, we're very low, similar to the Decentraland. Zoom out to see how low we are. All right, so this is where we sort of bottomed out. Similar to the Decentraland, there has been sort of this level at which point we sometimes see local bottoms and price recoveries. And, you know, this was the case as well here for OMG. Now, obviously, OMG hasn't like spiked significantly since then, but it did suggest that there's a possibility for a local bottom. Now, since then, we've gone from minus 40% all the way to minus 20%. So the MVRV is moving back to the positive side. However, it's still negative. Like on average, OMG short-term OMG holders are still quite a bit underwater, which according to this metric suggests relatively undervalued conditions. And then if we look at the long-term MVRV, it's also minus 30%. So it's basically the healthiest it's been since the start of the rally. So I mean, Brian has already shared, and Brian, if you want to share, or somebody else, if you guys want to share the link to that MVRV template that we have, just for people to keep an eye on what are the coins in the potential opportunity zone. I think a lot of ERC20 coins currently are, because they've been, beaten down to a pulp. Their short-term and long-term holders have been. So now they're sort of approaching these historical levels. We're not historically low just yet, but it's low enough where, like, if it was here, I would be saying we are super overvalued. Like, let's look at quant. All right, let's do some comparative analysis here. This is my boy quant here, right? Let's look at the quant's 30-day MVRV ratio. You see the difference? Like, it's high, right? Even here, like, it was pretty high, and the coincided with the correction. Obviously, it was a market-wide correction, but at the same time, like, it was relatively high compared to historical data. So the fact that we are seeing OMG and Decentraland and all of these other ERC20s sport relatively low MVRVs gives me hope. It's not a perfect signal, but it does provide some support for the idea that we can recover from these levels. All right, let's. Do we have time to look at the whales? Not really. Okay, let's look at the. We'll look at the whales. Let's look at long-term holders. Has there been anything interesting there? Okay, so long-term holders not really doing a whole lot. We do see some spikes in H. So H consumed is a metric that tracks the amount of. It tracks the renewed activity of previously dormant coins. So when there's a spike in H consumed, what that usually suggests is that coins that have been old, that have not moved for a long time, like long-term holders, are moving their coins. And as a result, whenever you see that happen, it happens sometimes during both local tops and local bottoms. It generally suggests there's a shift in the behavior of long-term investors, and that can kind of just signal that there's going to be some incoming price volatility. It doesn't necessarily mean it's going to go up or the price is going to go up or down, but it is a volatility marker. It suggests that the old ones are awakened, and as a result, there's going to be some fireworks on the market. So we've seen it here. We've seen it here before this crash. We've seen it here right before a recovery. Currently, there's not a whole lot that the long-term holders are doing. It seems like they're just content with sitting on their backs for the time being, which is fair. But yeah, so just another metric that I wanted to show. All right, I think we're gonna have to end it here as far as our analysis is concerned. I also am just gonna briefly go over SanR, like we do every week. So for those of you that aren't familiar, SanR is another project that we've been working on very hard over the last, I think, 6 months or so. It's a world's first decentralized marketplace for price prediction signals. So essentially, what you can do is when you have an idea about where you think the market is going to go next, especially a particular coin. Like, for example, let's see what we got here. Out of the coins that we have discussed, maybe we can just talk about Bitcoin. So for example, from this point on, if we have an idea of where Bitcoin is going to be headed next, we can create a rise signal, suggesting or creating a signal that says we believe that Bitcoin is going to keep rising from this point on, or a fall signal suggesting that Bitcoin is going to fall from these levels. You can also add advanced settings like target price and stop loss. And when you create a signal and you enter it into a forecast, into a staking program, you also get enlisted into a 2-week competition. And as you can see, we've got a lot of people competing and predicting where they think the prices are going to go. This is what's just been opened over the last 24 hours or so. There's people saying that Bitcoin might be, and there's a lot of people bullish, suggesting, Bitcoin is going to go up, DOT is going to go up compared to Bitcoin, BTC USD is going to rise. So, overall, it seems like at the moment, the community is about 85% bullish on BTC. Our community is. Less so on Ethereum, less so on DeFi, but that's you can also kind of see what the overall sentiment is of our users or our players. So anyway, let's say just for demonstration purposes, we think, okay, maybe there's a potential for Bitcoin to rise from these levels. We open a forecast, we sign a transaction, and the moment that we do, and the moment that this signal opens up here, and you'll see it in a minute. The moment we create a signal that's staked, it becomes on the backside, we mint an NFT, or a system mints that prediction as an NFT. So it becomes sort of an immutable proof of your market reputation. It can be removed. It can be tinkered with or changed. So whenever somebody in the future looks at your performance, like for example, I'm interested in this shock guy, right? What has he done previously? I can see that he's had 6 predictions that he's closed, and his current performance across 6 predictions is 56%. And it seems like he's very low on a lot of coins. He's quite bearish, which is fine. I mean, good for him. And he's been doing pretty well for himself. So I can be certain that all of these predictions have not been tampered with. They are completely decentralized, and each one is sort of supported by an NFT that has been minted on chain, right? And you can also click on every of these predictions of his, and you can see where he has set a signal to begin and where he has closed this signal. So I can also follow this guy if I think that he's potentially, a profitable trader, or if I think that he sucks at trading, I can also follow him so that I can counter trade him, right? In whatever case, I think this is a great tool to kind of just practice your market reputation or practice your market knowledge and intelligence. Play around with other players to get bi-weekly rewards in SAN just for basically nothing. So if you're interested, check out sanr.santiment.net. Play with me, Brian, Max, other people on the platform, and let's see who gets the better of who. All right. That's going to be, I think, it for today. We're already 15 minutes over time. Brian, anything to add before we go?
No, thanks for the nice explanation of SanR, Dino. I really think it's a great tool, so I hope you guys check it out. It's relatively risk-free. You're really only paying 5 SAN if you want to stake a trade, which costs roughly 80 cents, and any Ethereum gas fees, which are very low at the moment. So it's very low risk, and you have the upside of potentially winning a lot of crypto just for having the best predictions of the bi-weekly cycle, and we pay pretty nicely to the winners. I encourage you guys to use it for educational purposes and to try and win some free contest money. It's really fun, to be honest, and takes almost no time to make a prediction. So thanks for showing it again, Dino. Really appreciative of everyone who was able to join today, and I'm already looking forward to our recap for next week. So we'll see you all then.
Hey, I wanted to say shout out to Paul, one of the new people in the chat, saying that he's he's just come across the channel and he quite likes our analysis. Thanks a lot, Paul. Everybody that's new to the channel, please make sure to subscribe to it and like this video, share it with people that you think could find this type of data interesting. We are definitely trying to grow our channel more. I'm going to be posting weekly YouTube videos on top of our weekly streams, so there's going to be more content on this channel. Very much looking forward to your feedback as far as what you would like us to do, how long you would like us these videos to be, what type of metrics you would like us to look into, stuff like that. So we're going to be having more and more content on this channel. If we're interested in this type of analysis, please spread the love so that YouTube can recommend us to more people. Anyway, thanks everyone. If you're interested in all of the data that we've talked about today, the link to Santiment, app.santiment.net, is in the description of this video, as is the link to our Discord channel. So we usually just keep talking about the market over there after the call. So if you want to talk with us, if you're not already on our Discord, check out the link in the bio. All right, everyone, thanks a lot.
Brian, could you share the link to the template again? I think Google.
One more time? Oh, it took it away, huh?
Again that you shared in chat. You are an admin now, so Google should not.
Did the explanation stay, or should I put that up too? I'll put it all up. No worries. Okay. All right. There is the link for anyone. Thank you, everybody. Talk to you next week.
Thanks, guys. Bye-bye.